Hello and welcome to your latest Asset Intelligence Market Update. Since our last update, this season's Premier League title has been secured, yet again by Man City. We don't take sides here at AI, so there will be neither cursing nor celebrations in this video. What City's latest win did do, however, was make us think about whether there might be any lessons for investors in their title victory. One that certainly springs to mind is that success begets success. Man City have now won the Premier League title 3 times on the trot and 5 times in 6 years. In similar fashion, the large American technology companies, which often led the market throughout the 2010s and through the pandemic, are having a stellar time of things so far this year too. Certainly some of this renewed fervour has come about as a result of recent investor enthusiasm over the prospects for artificial intelligence. Whether it ends up killing us all or not, investors are definitely excited about what the tech could do for the earnings of companies like Alphabet owner Google and chipmaker Nvidia in the meantime. However, just as it would be very difficult to predict the exact order of the top 5 in the table at the start of a season, forecasting the eventual winners of technology trends can be notoriously difficult. Think back 20 years and you and I would probably have said the winners of the mobile phone revolution would be Nokia or BlackBerry. Think back 25 and no doubt we would have confidently said Ask Jeeves and Yahoo had search engines cornered. Just like Erling Haaland, some companies manage to break through a solid defence. And the risk is that that happens again, but to today's titans instead. This is one of a number of reasons why we at Asset Intelligence remain somewhat sceptical of the recent bounce in these stocks and are retaining relatively cautious positioning in portfolios at present. Many economic and geopolitical risks remain, and the fact that the overwhelming majority of returns have come from just a handful of companies so far this year doesn't feel like a market built upon broad-based foundations. In fact, it has the feel of a club spending its entire wage bill on a single fantastic striker. It might work in 1 game, perhaps even 2, but if the rest of the team isn't up to scratch, it isn't likely to lead to strong results in the long term. What else can investors learn from City's success? When the tide eventually does turn, underdogs can mount remarkable comebacks. Throughout the 90s and 2000s, City lived in the shadow of their crosstown rivals in red. How things have changed since then. The lesson is that in an ever-changing world, where some developments are so difficult to predict beforehand, leaning in with absolute certainty to one's views is a recipe for poor outcomes. While asset markets undoubtedly do experience some fairly widespread rough patches, as we saw last year, history shows that retaining a portfolio well diversified across a range of different assets, investment styles and regions leads to long-term success. Just like a club reaping the rewards of talented players, by playing the long game, investors can reap the rewards of their stakes in innovation and human ingenuity. Well, that's all from me this month. Feel free to like, comment, share and subscribe, and thank you for watching. Oh, and if you are a football fan, spare a thought for the team at Asset Intelligence. We're based in Leicester.